What's up, y'all? And welcome back to another episode of the BJJ Lender. It's your boy Sham, and today we're diving into a topic that has a potential to transform the way you approach real estate investing: fix and flip loans. If you're in the business of buying, renovating, and selling properties, these loans might just be the tool you need to scale up your portfolio, tackle multiple projects, and really make an impact. Today, we'll explore what fix and flip loans are, the costs and benefits, and how they can fit into a strategy to grow your real estate investments. All right, let's get into it, fam. All right, so what exactly is a fix and flip loan? Simply put, these are short-term loans tailored specifically for real estate investors who plan to buy, renovate, and quickly resell properties for profit. Unlike traditional mortgages, these loans are designed for quick turnarounds, typically 6 to 12 months, maybe a little longer in some terms. Now, here's the key difference. Fix and flip loans are often asset-based. That means approval depends more on the property's value and the potential profit of the project rather than your personal credit score. These loans are usually offered by private lenders or specialized financing companies rather than traditional banks. It's a different game than conventional financing, I know. And for those of you who move fast in the real estate markets, these loans can be game changers. All right, so let's get into why fix and flip loans have become so popular among investors. All right, so especially those looking into scaling. First and foremost, these loans can increase your cash flow flexibility, allowing you to tackle multiple projects at once. Instead of tying up your own capital in every property, you're able to leverage these loans and keep more cash on hand for other investments. For investors, that's crucial. Another major benefit is speed. Fix and flip loans have a quicker approval process compared to traditional loans, which can be a huge advantage when you're competing in a hot market. And when time is of the essence, the ability to secure funds quickly can mean the difference between winning and losing a property. Third, we leverage potential. Many fix and flip lenders will fund up to 90% of the property purchase price and even 100% of the rental costs. That means you can stretch your budget a lot further. And if you're trying to scale, this ability to access high leverage is essential. The bottom line is that fix and flip loans allow you to reinvest profits quickly, helping you build momentum and ultimately a larger portfolio. Of course, with all these benefits, there are also costs and risks that we need to talk about. The first thing to be aware of is that fix and flip loans tend to come with high interest rates, typically somewhere between 8 to 12%, and sometimes even higher, depending on the lender and the property. This is because these loans are short-term and carry higher risk for the lender. So you have to make sure that the property's resale value will comfortably cover these costs. Another cost factor is loan fees. Fix and flip loans often come with additional fees like origination fees and points, which can add up quickly. This is definitely something to budget for upfront. And let's not forget about market risks. If there's a sudden market downturn or if unexpected renovation issues arise, you could end up holding the property longer than planned. The carrying costs can eat into your profits, and if you're not prepared, that's why it's so important to have a clear exit strategy from the get-go, whether that means selling, refinancing, or having a backup plan. You want to remain in control of your timeline. So, how can you make sure you're getting the most out of these loans? Let's go over some strategies for maximizing returns and minimizing risks, all right? First, do thorough market research. Knowing the area's property values and buyer preferences is essential for choosing the right property. This knowledge helps you estimate your ARV, or after repair value, which is crucial when you're taking out a loan based on the property's potential worth. Create a solid budget before the renovation even starts. Unexpected costs can pop up, so build in a buffer for surprises, all right? And be conservative with your profit estimates. It's always better to exceed expectations than to fall short. Another big piece of advice is to build a reliable team. Your contractors and vendors should be people you can trust to meet deadlines and budgets, especially when you're working with a loan that has a short repayment term. Efficiency is everything, guys, especially in a fix and flip project. And finally, plan for multiple exit strategies. Ideally, you'll sell the property for a profit, right? But having a backup option like renting it out if the market isn't right can help protect your investment if things don't go as planned. To bring these points home, let's look at a couple of real-world examples of investors who use fix and flip loans to scale their businesses or portfolios. Take an investor who initially started with single-family homes. By leveraging fix and flip loans, they're able to scale up to multi-unit properties in a short period of time. Because of the quick turnaround times, they were able to reinvest their profits into even more properties, allowing them to grow exponentially in just a few years. Or consider an investor who completed 5 projects in a single year thanks to using fix and flip loans strategically. By reinvesting the profits from each property back into the next, they were able to fund more and more projects. And in a very short period of time, they built a portfolio that would have taken decades with traditional financing. It's a powerful way to scale quickly when used effectively, y'all. So, here's the takeaway, y'all. Fix and flip loans are a powerful tool for scaling a real estate business quickly, all right? They provide the speed and flexibility that many traditional loans cannot, which allows you to take on multiple projects, maintain your cash flow, and grow investment portfolio efficiently. But like any tool, they need to be used wisely. Plan each project carefully, budget for all costs, and always have a clear exit strategy to make the most of your investments. I cannot stress that enough, guys. If you're ready to jump into the fix and flip game or want to learn more ways about how to leverage financing for real estate growth, be sure to check out our previous episodes on the BJJ Lender, all right, y'all? All right, with that being said, I'd like to thank y'all for joining and tuning in to another episode of the BJJ Lender. If today's episode brought you new insights or you know someone who'd benefit, please subscribe, share, like, comment, and leave us a fucking review. Don't forget to visit our website for more information at fortitudestrategicsolutions.com or follow your boy on Instagram, TikTok, and YouTube at the BJJ Lender. Join us next week as we dive deeper into the financial tools and strategies to help you scale in the world of real estate and beyond. Until next time, stay focused, stay driven, keep flowing, keep rolling, keep growing. It's your boy Sham signing off.